What is up, everybody? Happy Friday out there. Merry Christmas to everybody. Hope you had a great holiday. And then we're rolling right into a weekend again. So, a lot of things stacking up here at the end of the year. Big expiration in the legacy markets last week. Big expiration this week for Bitcoin. Gold and silver spiking, going vertical right here, along with some other precious metals like palladium and platinum. So, we're going to take a look at all that. I wanted to listen to a podcast by Goldfix, and I'll bring that up here in a second. We'll listen through that. But before, let's take a look at some charts and get into this. If you're listening to this on YouTube, check out the Twitter. Also, check out the Telegram. Should all be linked there for you guys to find. If you're watching on Twitter, in the bio is a link to the Telegram. Come hang out with us over there. Make sure you like and retweet this so other people can find it. How is my volume level, guys? Just a quick check on the volume. Just a quick check on the volume. Let's see who's all in here in Telegram. We got Point, Theo, and Nick Six. What's going on, guys? All right. Well, let's just head into it here. Tell me if my audio is all right, and I will make sure to adjust it if necessary. So this is the Substack. Check it out. This one went out before Christmas. All-time high in gold is not driven by central banks. You can go in here and check this out. Let's look at some interesting stats here. So, we're told that central banks are buying all the gold, and that's why uh, the price of gold was spiking. And really, when you look at the numbers, you break down the demand numbers. It's really investment demand. So, investment demand in Q3, which is the most recent quarter that we have for gold, was 520 tons, and central bank demand was only 210. And it's going up. It's drastically rising in investment demand, as you can see here in this chart. So the investment demand is rising while central bank demand, really since last year, has fallen off. And I expect that to continue into the Q4 numbers. It makes sense that as price spikes, governments are more price sensitive here. They're not going to chase, governments aren't going to chase the price of gold higher, but investment people are. So it flows into the ETFs and things of that nature. We're going to see a lot more investment demand as people get FOMO and chase the price higher. Governments aren't going to be doing that. Governments are actually going to be pulling back some of their purchases. And so I expect Q4 central bank purchases to be lower. And that's going to directly contradict these people that are saying the demand is coming from central banks. So anyway, I think I'm hearing some feedback. Hope my audio is doing good. Turn that down just a little bit. All right. So that was a post that came out. Make sure you guys are subscribed over there on Substack. Let's do a little bit of chart action before we get into this. Look at this silver move, people. That is a perfect parabola. And let's make sure I'm sharing this with everybody properly. All right. So yeah, just look at this parabola, this blow off top. I mean, this is not sustainable. Anybody buying here? I don't think a lot of people are actually buying here. I think this is driven off of forced buyers, squeezing those shorts, squeezing the options. Silver is heavily pegged, like Bitcoin has been experiencing recently. Silver is heavily pegged, gold is heavily pegged. And so when you do get some sort of price action like this, you're going to flip a lot of those options traders and squeeze them with a gamma squeeze. This could also be a short squeeze. And so the price is ripping higher. I mean, I don't know how anybody can look at this and be like, oh, this is actually the end of an era. This means the central banks are blowing up. No, this is a strictly price driven bubble here. There is some structural issues, which we're going to talk about when we listen to the podcast by Goldfix. But those structural issues are themselves like, they're not signaling the end of an era. They're signaling there's some problems in the silver market. And this has happened before. Let me pull up a tweet here. So this tab. So this option geek, he says silver futures are up another 5%, edging dangerously close to triggering additional margin requirements from major commodity exchanges such as the CME. So they have tools, they have tricks up their sleeve. This happened with nickel recently as well. There was a huge spike in price and they stopped trading. Okay. They can always change the rules if the market is acting up, which is bad. I mean, it's not necessarily a good thing, but it could be that someone is blowing up. Is it the LBMA in general? Is it some big bank over in China or something? That's part of my suspicion of what's going on. So Silver Rule 7 back in 1980, an additional episode unfolded in April of 2011 when the CME sharply raised margin requirements to rein in speculative excess, sending silver prices crashing nearly 30% in just 1 week. A repeat of that playbook cannot be ruled out as early as next week. So this has happened before. We've seen this before. We expect the exchanges to stomp on this. That's at least what I'm doing. I'm expecting. Okay, so here is let's make sure I'm sharing the proper screen. Sorry, Telegram. Let me make sure I'm sharing the proper screen. All right, so this is Goldfix, and he has on here, what is his account name? Let me just double check. I think there's something with some connection to Tom Luongo. So VBL's Ghost, Soren Thank, whatever. I'm bad with names, but VB's Ghost is the account. And he also had Eric Young on. So we're going to listen to this back and forth. Now, let me know if this volume is okay as well. Okay, here we go.
Last night, in between our silver's doing this guy's getting screwed, that guy's doing good. In between that, we started talking about Venezuela. And Eric put together a piece of the puzzle, the key piece of the puzzle that we had been discussing all around but never touched on. So, Eric, please explain to everyone how you think Venezuela. Let's start with Venezuela. Tell us what you think.
Well, as everybody knows, recently the U.S. sent its entire Navy, or a large part of its Navy, down to Venezuela, essentially blockading Venezuela. And not only that, apparently the U.S. Navy has jumped, I'm going to use that phrase, to oil tankers that were heading to China.
First off, it's not a large part of the Navy. I think it's just over 10%, I believe, that's down there off the coast of Venezuela. So just 10% of the Navy. That's big, obviously, but it's not a huge part, I would say.
So essentially, if I may say, is most likely oil that is already bought by China, right? That's heading to, as I understand, heading to the Canton province, because that's where they have the refinery that can process the Venezuelan oil.
Right.
So something clicked, when I saw that news, because that's something new. That's essentially, the U.S. no longer just using administrative measures or financial measures to sanction or contain China. Okay.
This is interesting that they're framing it with China. I think there is, because they go from oil here into silver. I think the silver connection is much more legit than the oil, because officially, like, China doesn't get any from Venezuela. I think the first oil tanker that we got was headed for Turkey or something like that. So I don't necessarily put a lot of weight into this oil connection, but it's interesting that you're tying it into Venezuela and now into silver and South America with silver, because that's a big source of silver. But let's continue.
like it did in the past, right? Like now, the U.S. is actually using its military, the Navy,
Right.
to actually, do something kinetic to
Right.
stop a vital, energy, a commodity, going from the American continent to China. So I thought to myself, if they can do this to oil, which is
Right.
something that China is buying oil all over the world, right?
Right.
What else can the U.S. stop from going from the South American continent or the American continent to China? The answer is silver, because as we all know, China is buying a lot of unprocessed raw silver from South American mines directly.
Yes. Yes.
So I'm thinking, like if they can do that to oil, they can do that to silver as well. That's
Right.
my
If they
thought
can do it
process.
with the global, if they can do it with the global oil, silver's actually easy to do. And so, just to interrupt for a second to give you a little color.
Well, they can do it with copper as well.
When he said that, the two of us had a moment where we said, "Holy shit, we're at war!" And essentially, the connection from oil to silver made it. This is what we were talking about before Eric connected this dot. The dot was what I was saying was oil. If we can freeze oil coming out of Venezuela, right? What we do is we encourage a coup, because in Venezuela, in order for the regime to stay in control, they need to pay their generals with oil money, and they do that by giving them tankers, and then the money gets laundered overseas. And then Eric goes, "Well, who gets that oil?" And I'm like, "I don't know." He goes, "China." So we're restricting supply going to China. And then it all started to come into place. You guys may remember over the last 2 or 3 years, Eric, myself, Bai, and a couple others have been noting in earnest that silver producers in Latin America were getting their silver bought by China directly before it hit refined level. So it would be concentrate or doré bars. And at the time, as an American paranoid, I thought, oh, and I'm still right to be paranoid, China is hoarding silver. Maybe they have some ulterior motive. And that still may be true. But the fact of the matter is, Eric realized that they had been buying silver all along in anticipation of this event. Right, Eric?
Yeah, I think that's one thing, Vince. And another thing that is interesting to me, at least, I'm sure that you find interest to it as well, because we talked about it, is that some of our mutual acquaintances and some of my personal sources from China has been saying like a lot of really contradictory stuff lately that doesn't make any sense, at least to me. Like like if you just take it at face value, right? And the narrative that they're giving us is that China would love to wouldn't mind if the price of physical gold rises, because like we said, that's part of getting away from the US dollar and US treasuries, right? But these people.
Okay, so I don't buy this. I mean, you guys know the theory on de-dollarization. It's not voluntary. If it is happening, it's not voluntary. Like in this case, if they are stacking silver and de-dollarizing to do that, it would be defensive, not as some strategic plan to replace the dollar necessarily. And Puddington, I see you have this bull theory tweet, and it says silver prices are exploding due to severe global supply shortages. This type of behavior, a spike like this, is not a supply shortage spike. So supply shortage builds over a long period of time. There's something going on with derivatives, with the trading, whether it's some sort of delivery problems at the end of the month here, at the end of the year, that could spike this. But it's not like a severe global supply shortage. It's has to do with trading and being offsides. That's my opinion. It could also be a sign of stress in another part of the financial system, specifically in China. So you guys know I've been really hard on China, and I think there is a possibility that there's people in China that are getting really spooked, and they could be flying into silver. That's possible as well. And so that manifests itself in some sort of supply shortage because of a panic. Okay, that can be the case. But then I wouldn't call it a supply shortage necessarily. I would just call it a panic. And that's what we're seeing here. I think we're seeing structurally, the options market gets squeezed, the futures market gets squeezed, in addition to some sort of panic somewhere in China, most likely. And we're seeing silver blow up like this. So that's where I'm taking it from. I think it's interesting in this podcast, they're talking about Venezuela and the activity going on down there and how this Venezuela is kind of a linchpin that keeps that connects everything. It's just very interesting to think about that because it is not a nation state, it is a cartel state, and they are doing illicit things all over the world. China also has a vast amount of gas in storage, or not gas but oil in storage. I think it's more than the United States. In our strategic petroleum reserve, they have a lot of storage there in China. So losing 1 million barrels from a tanker, 2 million, even 5 million, 10 million barrels of oil is not even going to put a dent in their strategic petroleum reserves. They can make up for that, no problem. So I don't really buy that these tankers even were headed for China. But I think it's interesting to think about Venezuela and how it's connecting to all of these different markets. So let's continue with this.
Are telling us that China is about to put the hammer on the silver price,
Right.
because they don't want people hoarding physical
Right.
silver. Now, their reason that they gave us is because Chinese industry need cheap silver to operate, right? Or at least a silver price that is not outrageous, right? Which I understand, but let me tell you what, Vince. I think, in my opinion, the people who are saying that, maybe they're tied to the Chinese industrials, but this might not actually be what the Chinese government thinks, because I think the Chinese government itself is more concerned about the availability of silver rather than the price.
Right.
You see what I'm saying? So all this, because think about it, right? They are what's happening in China right now. The Chinese government, at least from the surface of what we can see, right, is working with UBS to limit new subscriptions to the only silver open-ended fund in China. It's not the ETF, it's the LOF, right? You can look it up. I explained it on my X.
Yeah.
So, but that fund,
it's a long-only fund, and the problem with a fund like that is when you have an immature market, people will, and there's only one place to get your metal, people will buy the equity, in this case a long-only fund, and that equity can drive at a price higher than the actual metal it holds. So it becomes kind of like the grayscale futures Bitcoin ETF that we had last year, and it's gotten crazy. So I'm sorry, go ahead, Eric.
I was just going to say that the fund doesn't even hold physical. It just holds futures contracts at the Shanghai Futures Exchange. Right. So I explained to my followers today that it's simply a liquidity sink, like what we talked about, right? Like if a government entity or anybody who wants, the citizen.
That can be dangerous, because as price goes up, it's going to squeeze that position, especially if the futures contracts or if they're not just only cash settled. You could see a spike in price really squeezing the people that are, not the people purchasing the ETF, the long only ETF, but the people providing the ETF. It can squeeze them. So that could have something to do with it as well.
Not to buy the physical, they would, allow the funds such as the LOF fund, LOF silver fund in China, where people can get price exposure, but it wouldn't necessarily reduce the physical metals availability in the market. And that's what that is, right? But the thing that is perplexing is that the Chinese government is kicking that thing. So that's supposed to be their vehicle of diverting capital into the physical markets, right? Yeah. But they are not. See, they're not just letting that thing run wild. They're actually limiting that thing.
Well,
okay, so that's point number one. Yes,
that's an important part. I think part of the conversation that we've had is that China, and again, we're not attacking China, at least I'm not, and I don't think you are either. You have a situation in China that, frankly, it's an authoritarian government, and they have immature financial markets, and that has been a knock on them by the West for a while. So now you got to ask yourself, if you're trying to broaden ownership and broaden your markets and democratize your financial markets, well, having only a long-only fund, only one product in there, and not permitting other products in there creates this bottleneck. It's kind of like the fund owns 1 million ounces of silver, but it doesn't buy any more silver, and people are buying it because they think it gives them silver exposure, when in reality, all it is 2 tons of silver in a 1 ton pickup truck, and it doesn't work. So the question is, I mean, not the focus of this, but the question that you raise for us to figure out down the road is, does China know that its market structure is bad, or does China not know that its market structure is bad? That's my question.
Oh, it definitely knows. It definitely knows their market structure is bad, but they have to do that. They have closed capital account. They have to do that, or else they would have money flowing out of China at a ridiculous pace. They definitely know that their market structure is bad, and it's bad on purpose.
Well, I think another interesting thing that we talked about, that we told our audience, time and again, is that on January 1st, 2026, the Chinese government is going to start export controls on physical silver. So that's the other piece of the puzzle that I see. You have fun. They're limiting that. So people are going to start, I already see that.
If they're importing at such a pace, why would they need to limit export controls? Perhaps it's capital flight.
People are starting to look at physical silver as an alternative. And the Chinese government is limiting, potentially, the export of physical silver outside of China. So my conclusion is that, is the Chinese government prepared for the increased demand of physical silver within its borders? And is the Chinese government also preparing for the potential, Trump administration cutting off of physical silver export to China from the American continent, and also by, through the COMEX to the LBMA to China, through that route?
Right. Now,
so that's what I'm looking at. Yeah.
No, really. Exactly. And by the way, everyone, this is where Eric's statement made a light bulb go off over my head. So I'll throw at you what I contributed, and then how we both said, holy shit, it's really happening. Number one, just to restate what Eric said, the China has been buying silver, I believe, and I think Eric does as well, to defray the potential shortage of silver should there be a full-blown trade war or embargo, so to speak. So China has been buying everything it can, whether it be iron ore, oil, or silver. Now, the Venezuelan embargo, which is, military embargo, is really, I was focused on Venezuela's going to have a coup, and Eric says, well, China gets hurt by that. And then we realized that China has been buying all this concentrate. Now, here are the pieces of the puzzle that I contributed that made this more obvious to us. Over the last 2 months, you've had the following things happen. You've had no shortage of silver in the U.S. You hear that coming from refiners and producers. They're swimming in silver. They're turning away silver that's not 4.9s. There's plenty of retail selling, but, and here's the piece that I can add here, it's not just retail selling. I've gotten reports from refiners and producers that we are pulling tons and tons of silver in raw material from Latin America at the same time that London has no metal. So that metal that's in Latin America is not going to China, it's not replenishing the LBMA, and it's coming to the US for refinement. Now the bottleneck is we don't have the refineries, or enough of them. So I said that, and we combined it with what Eric said. And
I have no clue about that. It's possible. There was also this going on in copper as well. There was a premium in the United States, and copper was flooding in, and it was just not being used. It was going into inventories. So yeah, copper, now silver, I buy it that silver is flooding into the US, and there's no silver shortage in the US. But again, that brings it back to saying this is mostly a trade type of situation, not necessarily structural. But I do think there's a piece that they should touch on. I don't think they do, but they should touch on it, and that is the actual state of China right now. it's not good over there. They're having major problems, as we've talked about a lot on this show with listening to Michael Pettis and others, that they're trying desperately to get their consumption up. They're moving from industry to industry in involution and overproduction and just destroying, like they're making their people poorer and poorer. When you have the highest savings rate in the world, you have the lowest consumption rate, you know. So yeah, the people might be saving and there might be, it appears as infrastructure and stuff, but if you are pouring that investment into non-productive goods, where you build another new train station where you don't need it, and it just, after 10 years it might fall down, or it might after 20 nobody maintains it and it grinds to a halt. One train a day for track, like 40 tracks or something like that. So this is all just wasted money, and when you waste money like this, you actually impoverish the people more. And so China, I think, is in a big world of hurt. And what does this silver situation, could that be interpreted any way like that? And I think it can be. There's some sort of panic happening in China. They're trying to rush into silver. They can export it again, and that would be a way of doing some sort of capital flight out of China. So they're putting a block starting January 1st on exports of silver from China. I don't think it's good. I think this is a sign that China is having major issues. Now, how do we bring this back to Venezuela? I think there's a lot of different cookie jars that Maduro has his hands in. And by stopping the flow and doing an embargo and putting pressure here, you're pressuring all of the dark money flows around the world. And that is going to deeply affect China as well. And so that alone, just by putting pressure on the dark money flows, can cause more pressure in China. Notice it's not causing that much pressure in the United States right now. So that's interesting to think about. We're going to do about 10 more minutes of this and then call it.
The answer is, well, America is implementing its Monroe Doctrine on the whole American continent, or both continents. And so basically, we're cutting off China from its oil, from its silver, from whatever we have, because we need to take care of ourselves. And the whole world is changing. And that's why China might be freaking out a little bit. I don't know. What do you think?
Sorry, I'll let it run here a little bit longer, but I don't know officially how much oil they get. Let's see. Okay, so official numbers here. China is Venezuela's primary buyer. Okay, very interesting. Vast majority of 70 to 80% of its oil. Recent figures placing volumes roughly at 560,000 barrels per day to over 750,000 barrels per day in late 2025. Okay. Petroleum reserve. What is China's petroleum reserves? Okay, so they have national stockpiles estimated between 1.2 and 1.3 billion barrels. So that it's going to take a long time to even put a dent in that from what they're importing from Venezuela. So very interesting. All right, let's continue.
I think it makes perfect sense, Vince. I mean, it looks like the U.S. is trying to contain China. You
Right.
know, from all the evidence that we've seen in the past several years, and like you said, it just simply looks like that going forward. I know it hasn't happened yet, but going forward,
Right.
the U.S. is going to stop a large amount of physical silver flowing. I believe probably beginning from the COMEX. Okay, so like from the U.S. itself, right? Flowing from the U.S. to.
I think that it's the idea of containing China is very interesting, because it's almost like the US has not been playing the game. The US has been at the party, but they're not really playing the game. They are or let's do this like at a pool hall, okay? Billiards hall. You, the US is the best billiards player in the world, and they went to the billiards hall, but they haven't been playing the game. And so other people have been winning. And now all of a sudden the US decides to play. That's what's happening here. We're not trying to contain China. We're just starting to play. And look what happens. The whole damn system falls down. Everybody loses their minds. The US is not, this is war crimes. The US can't play like this. No, the US is starting to play the game, and the entire system is falling apart. What does that tell you? Plus, the US is in such a dominant position, they just have to wait 5-10 years. Like in the past, people would always say, oh, China's playing the long game. China thinks in centuries, not in quarters and stuff. They're at the demographic cliff right now. Wait 10 years and it's over. I mean, the CCP might be over. The modern Chinese economy might be over, but China itself won't be over, right? Like Peter Zion takes it a little too far, but they're at a demographic cliff. Their economic model is over now that the US has decided to play the game. And we don't really have to do anything. We just have to wait. Now, Japan, on the other hand, I would be perhaps more concerned if I were Japanese, but as an American, we can just wait.
The LBMA to China. And
Right.
what we're seeing here in terms of the price differential or the arbitrage of the Chinese silver price versus the COMEX or the LBMA silver price, China is, I think, like 7% above the US at the open today. I mean, like as we're speaking, COMEX March front month contracts is catching up. It's almost at $76 now. Isn't that crazy?
Right.
Like just like it's just $76. Just now, okay, just jumped. So I mean, but like China's still like around 5% above the US,
right,
in terms of its silver price, and I think like the price reflects the place where there's a huge silver demand, and that the supply may potentially not be sufficient for that demand.
Right.
And that's China and India, right? That's what I'm looking at.
Well, there are so many. I'm sorry, I didn't mean to interrupt. Go ahead. Go ahead, Eric.
Oh, okay, yeah. I was just going to say that, so China has that huge demand, and supply may be cut off from the US and potentially the LBMA. So China is enforcing that, silver restriction starting January 1st. I think a lot of like family offices, investment funds, they're really looking at that January 1st date. They're sitting on the sidelines. They're waiting for that to happen. And then once that happens, they want to see what the effects are before they place their bets. Okay. But let's say if even Robert Gulf is saying this, if the US is actually restricting export in some format of physical silver to the LBMA or anywhere, right? Then I think that the price of silver internationally is going to be repriced rather quickly. Like right now, I don't think it's actually quick, because as you can see on the charts, it's actually like a grind up, right? You go 3 steps forward, one, exactly, right? It's like 3 steps forward, 1 step back kind of thing, right? But like if Trump come out and announce, hey guys, like we're no longer.
No, silver has been spiking. We just showed the parabolic move. It's not 3 steps forward, 1 step back. It's all at once here.
Longer going to give out our strategic mineral silver for cheap to China and India via the LBMA, then I think the market reaction is actually going to be pretty violent, in my opinion.
I think there are so many concepts that you and I have talked about over the last 2 or 3 years. One of them being the prisoner's dilemma. That they were buying and we were buying, and they were all like being nice to each other. But now, like, the gloves are off, and it's like they're all still trying to not make it a public crisis, but there's definitely a crisis underneath the surface. Now, we're fascinated with silver. We're fascinated with metals and oil and lithium and rare earths and uranium. But the reason silver, in my opinion, has done what it's done is doing what it's doing, I should say, is because it's the most depressed asset on Earth. So while we're having fun watching silver, every commodity in the world that's important, like oil, this is a problem. Silver, oil, lithium. China is trying to secure its own supply chains, and now the U.S. is trying to rebuild or capture its supply chains. And it's quite amazing when you think about this in a geopolitical sense. China could embargo Taiwan to prevent them from sending chips to us, right? We could embargo Latin America to prevent them from sending resources to China. And that's kind of what we're doing now. And I think China might be a little bit freaked out. Now,
I don't think China can embargo Taiwan. The U.S. Navy would have something to say about that.
A question for you, a question about the January 1st implementation for China. Do you think that this is a point of no return, or it's a negotiating ploy, just like we were threatening with the tariffs?
I think it's probably a point of no return. It's not like the rare earths. Because for the rare earths, China has most of the processing capability of the entire world, right? So, like as explained by the experts, all countries have access to rare earths. It's just that, you got to process the freaking thing, right? And to build the mine, you need time too, okay?
Right.
So China already has all the mines built and all the processing facilities. And they have the technology to process the rare earths, right? For silver, it's a little bit different. I think although China is the third largest silver producer, China is probably one of the biggest silver consumers in the entire world.
Yes.
So I don't think, in my opinion, the numbers are convoluted. Nobody knows the exact numbers, but just by looking at the evidence over the years, I think China consumes more silver than it produces. Okay,
right.
That's it. Just from talking to people like Bai, right, our common friend, and he has the figures. That's my conclusion at least. So
I agree.
Yeah. So okay. So anyway, I think what this export limitation, so to speak, tells us is that China is not confident that it will be able to get as much silver as it can get now in the future. So therefore, it's like gold, right? What comes in doesn't go out anymore.
Correct. Silver used to used to go back and forth, everyone. Silver used to go back and forth, and gold didn't. But now silver, what comes in doesn't go out. That's right. That's true.
Yep.
I mean, this kind of brings back memories or thoughts of 1871 when China stayed on a silver standard and they got screwed. Also, China has always imported a lot of silver. Most of the silver that came out, well, I don't know about most, but a lot of the silver that came out of South America during the Spanish Empire went directly to China. So they've always been an importer of silver. But there's no consumption. What they're saying about consumption, silver is consumed in industry and stuff like that, in electronics and so forth. So silver does have uses. It also has a high flow rate. If we're talking about stock to flow, I'm not sure exactly what it is. Let me see. Silver. Around 22 years. So that'd be about 5%. Okay. So 5% is the stock to flow. That means it's 5% of its supply is created every year or dug out of the ground every year. So that's pretty high relative to gold and especially relative to Bitcoin. But yeah, let's keep going a little bit more.
So I think that's what is going to happen because me and YY, YY, like the
I do.
the interviewer in Hong Kong, right? Like she used to work for major mainstream media
I love her.
in Hong Kong, and yeah, she's awesome.
No,
And
but I love her. I love her beyond that.
Okay, yeah, I joke with her.
Yes, of course.
We both know this, right? Me and YY.
Yeah.
When China says that it's export controlling something,
right?
Okay, you might as well call it a complete like ban of
Yeah.
something being exported, right?
Yeah.
Because like they're going to put you under the microscope,
Right.
basically. That's what it is, right? So like I think that's what it is. China wants to, whatever silver that China can get its hands on, it wants to keep it domestically, mainly for industrial purposes. But
Right.
because China is trying to become like a leading entity within the BRICS, organization,
Right.
China is also, in my opinion, not going to penalize silver stackers. They're going
No.
to say a lot of things like don't hoard silver, whatever. They might even
Right.
do what they do with gold, right? Like in the future, each individual can only buy, I don't know, like maybe 100 grams of silver per
Right.
month.
Right.
Okay, but they won't stop it completely. Okay,
Right.
so that's my point. Yeah,
that's a good point. I think it bears a discussion that with regards to China and what they say versus what they do. Look, every
yeah,
country does this, okay, every country does this, but with China, look, throughout the years, the U.S. has successfully terrorized China by accusing it of FX manipulation because they were manipulating the currency to be too strong, and that's what a nation does. They can manipulate their currency, and you try and keep everyone honest. Now, China stopped, manipulating its currency, or at least doing it enough to be accused of it, and started to peg against gold. Now, you can't accuse China of manipulating the price of gold or the price of silver because it's a commodity. See, the West said it's not money, and so China said, "Fine, it's not money. Then we're just going to buy it, and then when it becomes money again, we'll have all of it." Now, when you look at that, when you tie that together with how Buy
When it becomes money again.
and other influencers have backed off and are concerned about the fundamental.
So one reason why it won't become money again is because it is used in industry so much, and there's such a high stock to flow. That's why anytime you hear people talking about oil-backed currency or something like that, it's laughable because oil flows, right? Oil is consumed, and money isn't consumed. So it just doesn't function well as money because it has such a high consumption rate and flow rate. It doesn't make any sense. So silver will definitely never come back. Well, at least I don't want to say never, but in the foreseeable future, hundreds of years most likely, it's never going to come back as money unless we return to a similar level of development, of around 2,000 years ago or something like that. I could see silver coming back, and that's not a small possibility. I mean, I think, I am not a progressive. I don't think that we're progressing linearly to utopia or to be a multiplanetary species or some sort of future greatness. I think that's possible. That's one possibility, but that's not an end state. Okay, the path of travel is not straight and linear towards advancement. We are going to have setbacks. I'm not a cyclicalist really either. I don't think we necessarily have to be, we advanced so much on the hockey stick of civilization, and now we're going to go down, and then it's going to be another hockey stick of civilization go down. I think it's going to be kind of a random walk where we go with this, with civilization. But it's definitely, and it's possible that we continue to advance, but most likely that's not going to be the case. So there will be a period, some point in the far future, where we are back down to 2,000 years ago levels. Most likely, if you go out long enough in time. So see, that's different than tech progressives that like Elon Musk and stuff that, we're advancing towards some sort of ascension, right? We're going towards being a multiplanetary, and then maybe multisolar species, and then on and on and on until we advance and our minds expand so much. Maybe we get this transhumanism helps us evolve, and we are going towards this like godlike creature of ascension to the next realm, to the next level of existence. No, that's not going to be the case. That's not going to be the case. Looking far enough out, the chances for returning to a 2,000 years ago type of level is likelier and likelier. To if you go out 10,000 years, it's very likely, like 90% chance that we take 2,000 years off our advancement in the next 10,000 years. Only a 10% chance that it's the other way. That's how I look at things. But anyway, let's continue.
Fundamentals of the supply and demand in China, in combination with the fact that China does have 80% of the supply chain in silver, and it probably employs a lot of people. And something you and I have talked about, they're going to start using silver as collateral in the BRICS. So it's not just industrial. It's going to be used as collateral for all the countries, as you said, that don't have gold. The ones that have silver are going to pledge their silver. So China needs to protect itself and ring fence its own supplies because its incoming supplies are now being throttled by the U.S. I mean, it's an amazing situation. It's like mercantilism going crazy.
I think you nailed it, Vince. I think that's exactly what is happening. And, JP Morgan probably knows all this. That's why they relocated the large portion of their physical metals, precious metals trading team to Singapore.
Yep. The LBMA
is
I'm sorry. The LBMA is like the old mall no one goes to anymore.
Yeah, well, like LBMA is like the out of business yard sale, whatever, right? So like they're auctioning off the remaining silver that the LBMA has. I think that's what's happening.
That's right.
London.
I mean, it's kind of like what they've done to the stackers for years by making us think it was cheap to dissuade us from buying it. Now they're doing it to themselves because they just don't want to part with what they have left. And we don't even know if they have anything left. That's another thing you and I talked about that no one else really got. A while back, people talk about...
They can just change your rules, and crash it. So what happens, right, in these big blow-off tops, let's share the chart again. And I'll make sure to share that with you guys. So what happens in these big blow-off tops is you've destroyed all the shorts. It's a one-sided market at this point. Only longs exist. Every time someone opens up a short, they get instantly liquidated. Okay. So this is very heavily a long situation. And so what do these exchanges do? They up their margin requirements. I don't know what the margin requirement is for silver in these markets. Maybe it's 10%, maybe it's 20%, but they jack it up to 30, 40, 50%, and they instantly squeeze these longs, and they have to sell. They get margin called. Even though they're way in the money, they just do not have the margin behind their position anymore. And so these exchanges have a lot of power by just raising the margin requirements in a long-only market. So that's probably what's going to end up happening. Okay, let's go back and just a couple more minutes of this, and then we will bounce out for the weekend.
London Silver, London Physical. And at the hub of London Physical is something called the London Precious Metals Clearing Corp. And the hub of precious metals in the London Clearing Corp isn't physical, it's derivatives. They give each other IOUs for their silver. And you and I both have come to the same conclusion that there's definitely more than one claim on those derivatives. And so that silver is not there. It's not available. That's my opinion anyway. What do you think?
I think you're probably right, because I got wind today from one of my sources saying that why don't I just read it to you so that sure. I don't misrepresent it.
Hold on one second. Sure, Eric.
Okay, so the LBMA is breaking, sir. Just got told they might be forced to sharply adjust the benchmark price anytime. Any requests to extend these expiring in the next 2 weeks are being denied, no matter the rate offered.
That's fascinating.
Yeah. So I mean, like, I think it's a double whammy, right? Because I think what's happening is that remember I talked about how not only me, but like, Bloomberg, I think Reuters said the same thing,
right?
That China shipped a whole bunch of metals to like silver, right? Physical silver from the SGE to the LBMA back in October when the LBMA
that was them being a good faith actor publicly. Right.
Yeah. So they said they just shipped it out. They said 150 tons, I think was the number for 1 day. That's what they said, right? That's their source, right? And then I asked around, and I got like a 50-ton, 100-ton figure, metric ton. Okay. Right. And then funny enough, I kind of reported that, and I didn't really look into that any further after initially reporting that news. And I see just like last week or the week before that, a whole bunch of new experts, I guess, in the silver space are saying is actually 4,000 metric tons of
Shut up,
silver
really?
that China. Yeah, well, that's what they're saying, right? But that's actually pretty insane. That's a lot
Okay.
of silver, right? That China
Okay.
leaves out to the. But one thing I can confirm that I guess everybody got right, okay, including
Right.
Bloomberg.
I bet that's a lot of Chinese trying to get their money out. Anytime there's a new way to get money out, they do it and it floods out. So if that is the case, which is hard to believe, but let's say it is, it's probably people trying to get some money out.
Because that at least half of that silver, whatever the amount, was
Right.
drop shipped directly to India. So
Right. I
in
remember you
name,
said that.
in name, it's shipped to the LBMA, right? But
Right.
in reality, half of that was shipped directly to LBMA customers in
Yes.
India.
To
So that's
satisfy
what
an obligation that they already had.
exactly. That's
Right.
what in the procurement or like the manufacturing business, we call that drop shipping. Okay.
Right.
You're
Right.
shipping it on behalf of your customer to their
Right.
customer. Okay,
Right.
that's
Right.
what it is. Okay, so like everybody got that right in terms of the number.
Everybody got that right.
Is it
Exactly.
that part right? Everybody got that right. Okay, but like,
Exactly.
is it 4,000 metric tons? I don't know, because every time I open my screen on X, I see that number going up.
Right.
That's how
Right.
crazy it is, right?
It's
So I
infinite.
think it's in well, I mean, like I think maybe 2,000 metric tons is more believable. Like just based on the recent increase of SGE, SHFE silver vault numbers.
Right.
Okay, because it did.
All right. We're going to leave it there. I don't think we're going to get any more data from them. Big silver squeeze going on. I think we're close to the top. I've been saying this for gold for a couple months now. We're getting close to a top. Where the vertical ends, we'll have to wait and see. But one more time, let's take a look at that chart. It is just disgusting. I don't know who's buying this here. I don't know who's buying this here. This is totally parabolic. We've seen it before many times in silver. And what we were talking about was, it's not on this chart. Let's see if we can go back. There's a longer chart here. Not much longer. So we can't go back and see the 80. We can see the 2011 one and the spike. Let's take a look at RSI. I'll close this down. So this is weekly, and you can see the weekly RSI is extremely high, the highest ever for SLV, the highest ever on this chart. Let's go to regular silver price. Same with the weekly on the regular silver price. The highest ever on RSI. What about monthly? Monthly is probably the same. I've seen other people now starting to post these monthly RSI charts, guys. So your boy was the first one to be doing this, saying that why we're close to the top and all these things. So this is, according to TradingView and their ticker XAGUSD, this is the highest monthly silver has ever been on RSI as well, only going back to 2008. What about SLV, which goes back a little bit more? Same with SLV on the monthly chart. So this is getting ridiculous. It's obviously vertical if you look at this monthly chart. So this cannot go on much longer. We're going to see the exchanges coming in and upping the margin requirements and crashing this baby down. So if you have some silver that you wanted to sell, not financial advice, but this could be a good time to harvest some gains. Again, it could continue to go to 100, but in time, we're getting close to the top. Let's take a look at gold. We haven't looked at that for a while. Let me find the right chart here. Oops, this one. Okay, again, monthly RSI going back to 1973 and just at the very tip top back then as well. These dots were, I was looking at RSI for this, and what was I looking at? Oh yeah, this one. So this is 50-day moving average, distance from the 50-day moving average, okay? And you can see this red dashed line is where we're at right now. And every time that we got to this level, above this level when we peaked, this lasted a couple weeks. This lasted, 2 or 3 weeks. If we go back in time, this was a spike. That was the very top in there as well. This was a couple weeks, but it was at the top here as well. So every time we got to this far extended over the 50-day moving average, it has coincided with a significant top, at least for a period of time. So I was just looking at that this morning. Let's take a look at a few other macro charts before we head out for the day. So this is DXY. Really had trouble with that 100, but I do still expect the dollar to strengthen gradually over the next year or two. 10-year, nothing to report there. Oil had a big dip today, and you can see if we bring up the moving averages, just tagged that 50-day moving average to probably the penny, okay? And that was pretty close. But we're waiting for this to break up. Either it's going to break up or break down. The way things are headed right now, I'm starting to lean. I thought this might be oversold, but I'm starting to lean that this is going to drop further before we see any recovery in the oil price. And that is really bad. That means the marginal demand for oil is extremely weak. The global economy is extremely weak. China, they're probably happy that their Venezuelan oil has been being interdicted because they don't need it. They've been stacking it into reserves, over $1 billion or over 1 billion barrels in reserves. So, this is looking very, very weak. All right, that's going to be it for today, guys. Thank you for joining me, and I will make sure you like, retweet, follow. If you're watching on YouTube, like, comment, subscribe. All right, thanks, guys. I'll see you on the next one. Bye.